to yours. Welcome to EMS at C-Level. I am joined for the first time this year by Shaan Tharani from M&P. Shaan, thanks so much for joining me. Last time we spoke, it was at Electronica. There were some deals happening and there were some deals in the pipeline. Everything just seems to have moved so fast. Since then, we've had the start of the Trump presidency, tariffs, geopolitics. It just seems to be moving so fast. This weekend we had the German elections. What do you think is happening with the macro trends globally, and how do you think that's affecting the desire to make M&A deals or the concerns to wait and see what happens next?
Yeah, perfect. Hi, Phil. First of all, thank you for having me today. It's always a
Pleasure.
delight to be exchanging views with you, and I hope our talks today provide some food for thoughts for as your
Mm,
podcast is called EMS for C-Levels, food for thought, right, and
mhm.
inspiration, particularly to decision makers and executive leaders. Yeah, that we know of, and as well as those that we try to help strategize. Yeah. As you mentioned, of course, yeah, happy to dive into greater details about macro clarity, yeah, whether it's fueling or stalling M&A generally, and then of course into our area, which is electronics, EMS,
Yeah,
PCB, cable connectors,
yeah,
and lights, yeah,
yeah.
the tariff space. Um, well, well, I do have a position here. Everyone is asking and wants answer, right? Regardless
Yeah.
what type of market participant you are. Are you a single investor investing in stocks, or are you a corporate leader, trying to navigate through these challenges now? Yeah. I want to take maybe a step back here to address this question and look at the bigger
Mhm.
picture. Yeah. Before we understand what's happening now, let's understand what happened maybe in the last year, so 12 months, 18 months ago, yeah,
Yeah.
generally in the M&A market. I don't know, before pre-Trump era, yeah, you'll be surprised to hear this one statistic or data point, yeah, which is looking at from a German point of view. You mentioned German elections, right? So looking at from a German point of view, did you know that the DAX 40 companies and the 50 MDAX companies, yeah, spent approximately 43 billion US dollars in acquisitions in 2024. Now, these constituents are not only in the electronic space, they're in pharma, retail, and so on, but the majority of them have the demand and need for electronics, regardless if it's component, device, or so on. And it's not that they need this to sell to the B2B or B2C, but they need it to
Mhm.
produce their goods or services, right? To deliver them and so on. So electronic content flows in there. So, but and these investments are mainly due to getting a foothold in US and either in production wise, yeah, or optimizing footprint or increasing footprint, yeah. So now to the viewers here, 43 billion as a data point doesn't say much. That's one number. You need to
Mm.
compare it to another number. So
With
we
previous
so
future.
we
Yeah.
take the year before, this was $20 billion less.
Okay. So it doubled.
So 43 billion is quite a jump. So with the statistics, one could say, that larger market participants anticipated that Trump would win, first of all, right? And took a position or gamble, yeah, to invest in the US, which they rightly so did, and that figure is supporting it, yeah.
Yeah. Yeah.
Why? And the question is, okay, great, there's a figure, they invested. Why so? Because they anticipated that post Trump era, yeah, and that's where we get the fueling or the stalling part of M&A this year and years to come. Beyond that, in this 4 years of administration, we see that they anticipated that the acquisitions will be much more expensive, yeah,
Yeah.
so costly, yeah, and there'll be high barriers to entry. And that comes maybe to that point, right? Um, that once the new government comes into place, these items will be born. And they're right. And that comes to maybe the topic of what everyone's talking about, tariffs, right?
Mm.
I won't go in details of tariffs saying, oh, there's a 10% tariff between and reciprocal tariff between India and US and so on. I won't get in details, but it's the following. Since the 20th or the 21st of January, since he stepped in, I would like to call it as tariff roulette. Yeah.
Mm.
Meaning no one regardless if you're a C-level now or a government, yeah, you had no clue what was coming your way. It just basically, he woke up one day and said, hey, you know, I don't like that country. Yeah, I'm going to impose a tariff on that. And that's what happened at first. And now he's having this reciprocal tariff. So we see there that in this first quarter now, it is still uncertain what his actions are, and one cannot anticipate it. Yeah.
Yeah.
So therefore, that comes back to the point why those, let's call it 40 MDAX or 50 MDAX companies and 40 DAX companies invested that amount of money
Yeah.
ahead of time. So that is one of the understanding of stalling or fueling of M&A. M&A
I
was,
think what's interesting there, sorry to interrupt, Shaan, is when you look at that strategy of European companies buying in the Americas, a lot of companies were already thinking about that and thinking about strategies in the build up to the pandemic. They stopped in the pandemic, and there was a kind of a desire to restart afterwards, but they weren't quite sure how to do it. And that fits exactly into your timeline of, you know, thinking ahead of the next presidential election and thinking, well, where do we need to be positioned in that? And it became even more critical. But the fact that by the middle of 2022, when the pandemic was easing off, they hadn't already made those acquisitions, although some had managed to do some business during the pandemic, meant there was a kind of a latent demand building up.
I mean, that's the perfect word for the talk of the window of opportunity, right? You had the COVID part, right, where everyone was uncertain. Those that were maybe, and then I look now at electronics, those were that addressing ventilation business, medical sector were thriving. So therefore, like they were thinking, if I'm making anyway this good performance, I don't need to think about strategy now. I'm just gonna have that cash cow come in, short-term minded, yeah, strategies. And then those that said, okay, next election is there, COVID, pre-COVID is here. What do I need to do? And they'd use that window of opportunity to invest. And regardless whether you're a large player now, yeah, MDAX player, for example, or you're a smaller player such as a Keytron or a Scanfield or the likes of that in the EMS sector, yeah, regardless, some thought far ahead, other players were just mindful that as your business grows, yeah. And I look at it always more because I support a lot of Europe and UK clients, right? So I look at their strategy. And if we look at the EMS market, the top 16, 15 players in EMS per se, yeah, are all below 2.5 billion, 3 billion is almost the biggest, right? Whereas if we compare it to the EMS in US, right, they're all multi-billion-dollar companies,
Yeah,
creating Complex, Sanmina, Celestica. So they're more mature in building up, yeah, in the US, whereas in the Europe, they were more focused on their countries or their
yeah,
regions,
yeah,
focusing on Eastern Europe and focusing a bit on getting customers in Asia and setting up Asia, which was
mm,
that was the evolution, that was the correct way to go. So, regardless of that, those who took some food for thought and said, okay, I need to be mindful that as my business grows, North America remains an important marketplace, both B2B and B2C,
yeah,
because it's a
yeah,
300 plus million population. So if they consume, regardless if it's a chocolate or a device, right, an electronic
yeah,
device, there is demand there. So it's important in that context to understand that there needed to be strategies done and to get a
yeah,
foothold, either get a foothold or expand your foothold. And I'll
yeah,
do that in a few moments, but definitely that is what I see in terms of macro clarity, that it was
yeah,
fueled before. In the first quarter, I believe it will be stalled. And
yeah.
as we approach summer, yeah, M&A
When
will
there's
take
more clarity. Yeah,
clarity, the dust settles, all the actions have been spoken out by Trump, yeah, then we will see M&A being fueled again. But
yeah,
that does not mean that the leaders of today, yeah, executive leaders, are sitting around and just concentrating on the business. Behind the scenes, and I can tell you for the one or the other client I'm supporting, behind the scenes, there's already contemplating
yeah,
moves,
yeah.
understanding, and not
Scenario
sitting.
planning. Yeah,
Exactly. Not only also keeping targets warm, having the discussions, and so on.
yeah,
Because they
yeah,
know that when it comes, the leadership is there and they understand that I need to make that move quicker than my
yeah,
competitor, right?
yeah,
So the momentum on the global stage Yeah,
Yeah.
from leadership teams are embroiled, and they are embracing that, and they're ready.
Yeah. Yeah, and I think it makes sense. And I think what's fascinating there is that kind of shift in momentum to fuel, stall, and then fuel again, and the timing and what people are thinking about in the interim. What I actually think is also fascinating, Shaan, is the fact that the largest EMS, Zollner in Europe, is sub $3 billion, and you've got 25 $30 million Flex and J-Bill in the US, and even down to like Benchmark and Plexus, they're much larger. That tells an M&A story of the last 20 years, which is a completely different discussion and a completely different show. When you look at the strategies these people are applying going forward, there's always a consideration of whether to acquire or whether to go greenfield. I think again, the tale of two continents is that Europe's often gone greenfield rather than acquisition, and the US has like moved fast and broken things and acquired instead. Um, what do you see as that equation with respect to greenfield, um, as opposed to acquisition? And do you have examples of how they've worked differently?
So yeah, I think that's a very good question, and I think that move, let's call it the moves getting into US, yeah. So while US firms, right, as you've mentioned, are eyeing acquisitions abroad, yeah, because we see there's a big multiple spread now that has developed in the last quarters and is developing now even more, whereby US firms current trading are higher than their counterparts parts in the Europe area, yeah, and the spread is getting bigger. Hence, US firms are possibly also eyeing, while there's good growth in their country, they're realizing that they're possibly eyeing deals or transaction and targets in Europe, among others, because there's a discrepancy between multiples, and therefore you could add value in that sense, right? Because if I buy something at a cheaper multiple, then I apply my multiple, it's accretive in that sense, right? So that is the first thing. But what you're asking is the opposite way around, yeah. And I believe that inbound investments and acquisitions in the US are set to rise, yeah. As European companies, as I mentioned, are prioritizing US investments. We saw it with that statistic I gave you, yeah. And amid the global, let's say, macro sentiment now, there is the need to have a foothold there, especially if Trump is putting up his shoulders and
For
elbows,
sure.
right? You need that, yeah. So from an electronics and EMS point of view, yeah, we can see that these moves have already been made by and initiated by a few in 2024, yeah.
Mhm.
However, only maybe a handful, limited ones, were successful in executing it. So I know many market participants who have looked at stuff in 2024 but did not execute. Why is it
Mm.
so? That comes back, and based on my knowledge, yeah, many have screened the market. They understand what they have out there, yeah, but acquisitions are way too expensive.
Yeah.
And as a result, if it's too expensive, there's a valuation gap between buyer and seller, right?
Yeah.
And this valuation gap, yes, it exists, but that does not mean you get off the table and stop negotiating. There are
Yeah.
mechanisms to manage this effectively, right? And some players, and that comes to me, some players don't want to hire advisors like myself, yeah,
Yeah.
to help them get the deal across the line. They rather do it themselves. However, we bring, yeah, different
Some
uh,
creativity and yeah.
creativity, aligning and making sure that the gap, yeah, is closed between buyer and
Yeah.
seller, and that can be done through effective M&A tactics and strategies and mechanisms, right? And
Yeah.
that is one of the reasons why a majority of them who said I can do it on my own have failed in acquiring a
Yeah.
footprint in the US, among other areas, yeah. But therefore, let's look at it the other way. Yeah, if you do not do that, you're not successfully seeing your strategic roadmap being materialized. Yeah, and that's a critical factor, and a factor that is not to be undervalued, especially when hiring an M&A advisor who's a specialist like myself in electronics.
Mm.
Yeah, but coming back to your question, more importantly, as a result of too expensive acquisitions, right, in the US, the alternative is what? And if you don't
Build.
acquire, you do greenfield or brownfield development, right?
Yeah.
And so if we look at one of the companies, and that's a good example, SVI. SVI Group is a Thai electronic manufacturing services group based out of
Hmm.
Bangkok, Thailand. They're set up globally, and they make approximately over 600 million in top line sales. Yeah.
Yeah.
And what they've done is they've announced their opening of the production facility in US in January.
Yeah.
And this is a pure greenfield. Yeah. What that means for the viewers who don't understand is instead of acquiring, they took the time, they found a plot, they found a building, they've equipped it, and so on.
Hmm.
This is great. This is one way to get your foothold and footprint in the US, right? But with the efforts of greenfield is very, and the efforts of brownfield is very strenuous. Yeah, it takes much longer, right?
Yeah.
So there's a timing element. It requires significant upfront investment, right?
Yeah.
And then you're at the beckon and call of basically government to give you the permits, yeah,
Yeah.
to wait for the permits and
And
get,
hopefully an incentive as well. Yeah.
and then maybe you have to incentivize them, right? Yeah, and vice versa. Maybe you get incentivized, tax breaks and whatnot for setting up shop there, right? But at the end of the day, it's a far lengthy process. It
Mm.
requires hiring, yeah, and retraining and reskilling of employees. And
Yeah.
last but not least, if you're a specialist in one or the other area, like medical or so on, you need to requalify or qualify your site and audit it.
Yeah.
And all these factors take time, money, yeah, and take off focus from executive management to
Yeah.
focus on the core of the business. So
Yeah.
therefore, immediately, if you acquire a company, yes, there's a transaction timeline that takes place between 6 to 9 months, right? And
Yeah.
integration and the cost of integration. However, if you acquire something, you're immediately a plug and play, so to speak,
Yeah.
right?
You are.
You
Yeah,
don't have to
absolutely.
wait. And that waiting time is something of uncertainty you cannot control, and it's a risk
Yeah.
factor.
Yeah,
So
it is absolutely a risk factor. And it's a big risk as well. I think what's interesting is if you look historically over the last 10 years, there have been a few European companies that have been successful with greenfield or brownfield in Mexico, for example. And I think that's where available stock of acquirable businesses has been really low. So there has been almost no choice but to do that. And then you look at other success stories, maybe like Zollner in Costa Rica, which has been a fabulous partnership. And been very successful for them. What I think was really interesting, just reeling back to what you were talking about the asymmetry in terms of multiples, in terms of valuations, is it looks to me like it's an opportunity for maybe some mid-size American companies to reverse into something larger in Europe, which I think is a really interesting opportunity because if you're say 300 million and you pick up something in Europe by reversing into it that is maybe a billion, and you then have that as an addition to your US multiple, then that's a huge value add to your business.
quite certainly so, but you need to look at it this way that um, if I right now am focusing in the US market, imagine I'm a pure player, right? Like SMTC right now, who just focusing on US. I have nothing outside in Europe. Yeah. That could be one strategy. But maybe I could reap so much growth from the from the American market, right? That is better than acquiring abroad. So it
Mm.
depends what the strategy is, and that's why uh, one of these companies needs to do, or that's what we do on behalf of our clients, is you need to analyze what is smarter for me. Do I
Yeah,
continue to operate in my area, yeah, or do I take money in my hand, whether it's equity or debt, right, and buy something abroad? And will that add value, and how much value will it add to my entire portfolio? But then the second layer on that part is that if I add that, who am I? Am I a family owner? Am I a public listed company, or am I private equity owned? Because if you're private equity owned and you have an exit horizon, you might not feel the benefits or reap the benefits in the timeline you have left, right? If you're a publicly listed company, that is great signal to the market because your stock price will go up, hence your market capitalization will go up. And if you're an owner, then you need to be in it for the long term and have a succession plan in place to see reaping the benefits from your acquisition. So
yeah,
there are multiple dimensions to be looked at. On the surface level, as you mentioned, yes, it is a great strategy, but it really
Yeah.
depends on many dimensions, many layers, and then what you
Yeah,
buy.
absolutely.
Also, you can buy a larger piece in Europe, but then maybe you're only focused in industrial, and you have a big client, and it's lots of dependencies, which could be
Yeah.
risky as well.
Yeah,
So
there's a lot of factors.
so that's the factors, right? But coming
Yeah.
back now to the question that you asked me about greenfield versus brownfield, right? So I've given you the example of SVI. That has,
Yeah.
we'll see how it works, but that has gone live in January. Yeah. If we take
Hmm.
the other side now and we look at it, who has managed to pursue acquisitions successfully in order to get a foothold in the US? Uh, I want to say Indians have been very successful. So there's a
Yeah.
company, an Indian EMS group called Cyient DLM. Yeah,
Yeah.
it is publicly listed, I believe, and they
Yeah.
acquired Altec Electronics in the last quarter of 2024, right? So
Yeah.
Altec Electronics is not the biggest right now, but it has a strong footprint in medical, healthcare, and industrials, right? The
Hmm.
sectors, which science strengthens itself on, right? These capability in these end markets, add diversity to its existing customer base, right? But most importantly, Cyient DLM has obtained a local footprint and local access to the
Yeah.
US market. And that's an important step not accomplished by many EMS players right now. And another one like that, I believe, was Dixon. Was it Dixon or Keynes that also acquired another US company? Summer-ish, maybe, yeah, around summer 2024 it was
Yeah.
announced. So you see that these two Indian companies have been successful, but we've not seen in 2024 any European company, electronics EMS company, acquire in the US.
Yeah.
They've screened probably the market, but they weren't
Yeah.
able to see it through, right?
Yeah.
So then the question mark is, will we be seeing transaction this year and next year from EU companies or European UK companies in the US, or will they be saying, hey, that's too expensive for me. I'm going to focus on
Yeah.
the area in my region, right?
Yeah, there's some economics there, isn't there? Because obviously price is high is one thing that puts you off purchasing, but also cash flow is the other factor, and there's been a dampening of demand in Europe. So those European companies are probably not doing quite as well as they were 18 months ago for sure. 2024 was a pretty tough year for the European EMS industry.
Exactly.
I think the average decline
Everyone,
was about 15%.
you mentioned it, everyone was reporting, a drop in revenues, and so that was a big factor for 2024. People were
Yeah.
working on the inventories, which were left in their warehouses, right? That
Yeah,
cash flow as well.
which are now with their customers. Yeah,
Exactly, and hopefully that will get sold, so there are more call orders that come in, right, to the EMS world. So, but regardless of that, to get a foothold or expand operations in America is key. Yeah,
yeah,
it just depends who you are, what size you are, and what's your ownership structure, right?
yeah,
Regardless now if it's US, Canada,
yeah.
Costa Rica, or Mexico, I think you will need it in either in the short to mid term.
Yeah, and I think if it's Canada, Costa Rica, or Mexico, you need to figure out what the tariff outcomes are going to be, and there's going to be a little bit more clarity on that month by month. I think what's really important from a selection of support is the work that you do when you're thinking about the business strategy, the ownership, the succession planning, all those things, and look at that holistically, and build the M&A strategy on top of that, rather than using the M&A strategy to drive everything. It's got to be synergistic with what the business is looking for and what the owners are looking for as an outcome, and what those timelines and horizons are.
I totally agree, and that's why we are specialists in the electronic space, yeah, for M&A. Meaning that in comparison to other advisors, they understand the process well. But while we understand the process well as well, right? Our forefront and competitive positioning is that we understand the companies, understand where they need to grow, how they need to grow, and what fits. And then comes the M&A process as a tactical toolkit to fill that roadmap and to get you
Yeah,
what you want, right?
yeah.
So
And
that's
for me,
that's
that's huge.
that
The
yeah
idea
that's
that you've got to teach someone the EMS industry first, and it is a strange beast that has got a lot of history, a lot of baggage with it. So you really need to understand what's happening, and you do that, Shaan. So I think that's hugely valuable.
I must be honest, it's a bilateral learning between the
Yeah,
executives and me, yeah, because I also learn. It's never ending.
Absolutely. Every day's a school day, Sean. We both
Exactly.
know that. We both
But
know that. Before we wrap up, I just want to run through some of the deals that we've seen recently, and give me a little bit of a examination of the rationale behind these. Let's start with Zero and EPSA.
okay, good. So zero EPSA. Let's start there. So looking at 2024 generally, yeah, it was a below average year of M&A activity in the electronics market and EMS. Yeah, we saw that rebound at the very end of 2024, and that's why I'm guessing you're going into these deals because let's call it the deals that happened in 2024 more or small, regional, or distressed. And I want to mention that towards the last quarter of 2024 into 2025, the beginning of the first weeks, there were three noteworthy European deals to mention or examine. The first one, as you mentioned, is EPSA. So the Zero Group acquired EPSA, right? German owned, where MP Corporate Finance was exclusively mandated by the founder of Zero, which we initially sold back in the days to a German financial investor called Deutsche
Okay.
Beteiligung AG. Yeah, and so under the new ownership, Zero Group then grew from its one plant in Germany, yeah, near Stuttgart, to having an Eastern European facility, which is low cost or best cost as they
Yeah.
called it back in the days, and then they acquired a small U.S. footprint by acquisition as well. Yeah, that happened. So they've grown significantly, both in revenue and geographic production presence. However, they were lacking medtech, let's call medtech equipment, in high-end industrial applications, which was bolstered by the acquisition of EPSA. Also, what EPSA had, EPSA was in East Germany in its recent acquisition. What also EPSA had was additional development capabilities, enhancing the expertise in software and hardware development and mechanical engineering, which is an important element now as you try to grow your margin. You need to offer your clients engineering capabilities.
Mm-hmm.
So that was the deal there in terms of getting additional capabilities. It wasn't so a
Yeah.
regional play or getting more market
No,
share
because it was German
in
on German. Yeah.
German on
Yeah.
German. The
Yeah.
question is
Capacity and capability.
exactly the question is what's next in store for Zero Group and how will it navigate moving from the 200, 250 top line to the next cluster of
Yeah.
players, which is then getting to the top 20, so to speak, once you get to the 350, 400 million
Yeah.
in
Yeah.
Europe.
To the top 20 in
So,
Europe.
so that's the bridge
Yeah.
that they need to gap now. Is it the
Yeah.
question is will the current owners bridge that gap or will the new owner bridge this gap?
Yeah.
That is
Yeah.
a question that we're waiting to see, and we'll find out
Yeah.
in the coming quarters. Yeah.
Okay. And what about the deal between Circor and Profectus?
So
What was
yeah,
that one all about?
another Swiss German deal. So Secor, I have to say, Secor has been really on a shopping spree in the last 24,
Yeah.
months, so to speak, 36 months, but particularly in the UK. Yeah,
Yeah.
the acquisition, they did three acquisitions in the UK, which was very good from my point of view or my perspective, was a very, very good move. Yeah, as it allowed them to reconfigure the end market presence and
Mm-hmm.
exposure of the group, thereby focusing more through Access Electronic TT
Yeah.
acquisition in the UK, getting more A&D exposure, which has then
Yeah.
helped them to increase the EBITDA performance, increase the top line, of course, but EBITDA performance in a higher ratio than its top line in terms
Yeah.
of value, but its share price has also increased from that. Yeah,
Yeah.
so it's definitely a good on a good path. Some might
Yeah.
argue, hey, why should I buy such smaller targets? But it does so correctly because you're not going to find large A&D targets in Europe. Yeah.
Yeah.
And then now it's acquired Profectus, which allows them to get that German footprint, get the
Yeah.
industrial energy and market exposure.
Yeah.
But to my public and to public knowledge, or to my understanding, Profectus was not the strongest performer. Yeah.
Yeah.
Which I believe will change under the control of Mr. Hagemann and team of Secor.
Yeah.
And that will
Yeah, they're pretty bit of Swiss efficiency there. It's a strong brand, but
right.
it's an interesting strategy, and I wonder if that post-Brexit has added some attraction to some of those UK acquisitions. You look at Circle's acquisition trail, but you also look at Note, for example, that have acquired
Yes.
a few companies in the UK and have done that process of taking companies that are a relatively low multiple and adding them into a business that has got a double-digit multiple that is much more attractive in terms of bolstering their stock price.
that has been very lucrative. Now the question to Secor is, and it's public news. It's been mentioned. It's a market rumor, I guess, that they're looking at Eolan, which is the French company. I think
Airline.
acquiring all nine
Yep.
sites, if on top of my head, if it's nine sites, it will be a big game changer for Secor. Yeah, both
Mm,
in terms of size, that will jump the ranks to under the top 10, right, in Europe. Nevertheless, I believe acquiring Eolan will come with significant operational challenges, along with
absolutely.
inheriting a larger cost base, which,
Yeah.
if you're a 300 or almost 400 million company like Secor, you understand your area. But if you add another 400 500, right? I don't know what Eolan is at right now, but in that ballpark, you're becoming a $1 billion company,
Yeah.
much bigger ship to navigate, right?
Yeah.
And challenges. So that,
Yeah.
that jump is quite a big bite, yeah, or shift that
Yeah.
you're.
And the
So
integration of nine sites, most of which are in France, which is
France,
a challenge in itself with the social requirements. Just recently, we've seen All Circuits announce their acquisition by what is it, DG Group,
yeah,
DG Technologies, the Chinese company. So that's an interesting one because again, that's a footprint play. They have they have position in Vietnam, they have position in China, they have position in India, none of which all circuits have, and all circuits bring Europe, North Africa, and Mexico to that party. So it looks like
yeah,
a sensible acquisition. The last one I wanted to ask you about was Flex Trieste and Faircap. Um,
yes.
what's your take on that?
So this is another sort of a deal, yeah, unlike the next two, the previous two. So Flextronics, the global giant, as everyone knows, or
Mhm.
Flex in short, is looking to reconfigure its portfolio and acquisition strategy, and thereby let loose of non-core business. One of them being the Trieste site, and so it has now offloaded the site to a German financial investor called Faircap.
Mhm.
So this is a very different attempt here, where financial investors are looking to buy low-hanging fruits, consolidate them in Europe, and in an attempt to collect a portfolio of EMS companies, right, or EMS and beyond. Even some are looking at value chains beyond that, and operate them and establish a new market participant.
Yeah.
And so as this happens, and there's several cases we'll be seeing in the next months, and we've seen in the past in France, Netherlands. I want to call them the domestic groups that are being built.
Yeah.
Yeah, I want to understand more about how these companies will then be a participant in the wider competitive, let's call it,
Landscape. Yeah.
landscape, compared to the traditional ones that we know in Europe, right? So it'll be
Yeah.
interesting to see how they will progress, if they will progress in the midterm, and whether they become a threat, yeah, to those strategic groups, the traditional ones, or will there be some onboarded by some, right? Over
Yeah. Yeah. And is that picking up as you mentioned, low-hanging fruit, but is that also picking up a bargain? Is that what that's all about?
Yes, picking up bargain, trying to turn it around, right,
Yeah.
and
Yeah.
make something out of nothing. Yeah,
Yeah. A site
and
that basically the previous owner wants to exit and at least this way the jobs are saved and potentially there's some value
maybe
built from it, almost like a carve out.
yeah, it's a total carve out here. Yeah, the only difference is that maybe with the new owners, they will go to smaller customers and try to serve them in the vicinity. Whereas if you had a larger corporate, the corporate doesn't look at those small customers because they don't make their threshold of minimum revenue. So
Yeah.
different business model. But then some of those regionals customers will build up then into becoming larger key clients again
Yeah.
as they evolve, as their product gets more mature, as a solution offering comes, or as they expand internationally.
Yeah.
So there's always this element there of reestablishing the company itself, right?
Yeah, yeah,
So that's
yeah.
the
Quick question before we wrap up. You mentioned
sure.
earlier the two Indian companies that are acquired in the US. Obviously, India is being indicated as a substantially growing market. It has some might say, overheated stock market and some very high valuations on their EMS companies. So there's some value differential there. Do you see activity between India and Europe, India and US growing in 2025?
So until a week ago, the last week basically there was quite a dip in the equity markets in India, yeah, which can be seen across the board. But regardless of that, the valuation of EMS companies remain incredibly high
Yeah.
compared to the norm. Yeah. So, with that being said, I wouldn't look at it from that point of view, but I would look at it that Indian companies have the firepower to acquire. Now, the question
Yeah.
is, do I acquire in Europe? Yeah. Or do I reap the benefits of a growing domestic market now?
Yeah.
Yeah. I think it is twofold. It's a dual strategy. They should continue doing the market, yeah, what they're good at, but at the same time, get acquisitions done in Europe and US, yeah, in order to have this cross-selling potential and funneling customers back from or larger key accounts that you serve in Europe. Maybe those brands can be served in India as well. So there's an
Yeah.
angle and element of play. You just don't
Yeah.
need to buy big and be established globally. You need to be buying something with a good customer base that you can hopefully funnel back if it allows you to. And then no rigid elements such as aerospace and defense
Yeah.
has,
Yeah.
right? But to conclude that, I think India is a good market. It is something in the strategies of many global players.
Yeah.
It just very you have larger mid to large players that are owned in India, publicly listed, but then you have several mom and pop stores. So we're seeing the same
Yeah.
China effect, which we probably had 10 years ago. Now
Yeah.
in India,
Now
the
playing out.
now playing out. Yeah, but looking
Yeah. I think
ahead,
that.
generally, what we're seeing is from a private equity point of view, yeah, we're seeing increasing pressures for general partners, yeah, to return the capital that capital to LPs, the legal
Yeah.
partner,
Yeah.
combined with record levels of dry powder, right?
Yeah.
So it means an improved financing conditions, lower interest rates coming down, and those elements will certainly drive M&A and new growth
Yeah.
opportunities, both in EMS, electronics, and the general, market sentiment. So coming
Yeah.
back to answering the question, macro clarity will fuel M&A, yeah, after the first quarter. Nevertheless,
Yeah.
to those listening, I believe that those who will lose out are those who will just sit and watch and observe. Those who will
Yeah.
win are those who are getting their ducks in order, their strategy in
Yeah.
place,
Yeah.
and being ready to say when it's time to go efficiently
Yeah.
and knowing
Yeah.
what they want, right?
Yeah. No, I absolutely agree with you, Sean. I think it's that time where you need to watch very carefully what's happening, particularly as we have these changes in power in the US, but also in Germany. I think that's interesting to see what happens there. I think whilst that's happening, it's not just wait and see. It's make sure you have your M&A partner in place, make sure you have those strategies aligned with your business and what is potentially out there. Make sure you've identified targets and started to build a dialogue with them. So 3 months time, when we do have clarity on everything, you can hit the button and you can start moving quickly.
Exactly. I mean, coming through last point, coming from the German election now, the results of that has also led to a probable joint venture between Rheinmetall and Leonardo, right? Because increased defense spending and so on. So these
Mm.
market participants that the EMS or
Yeah.
cable connectors industries serve, yeah,
Yeah.
the supply chain are also changing. So you need to
Yeah.
navigate that. And I look
Yeah.
forward to steering my existing and new clients to navigate through these challenges or current
Yeah.
situation, not challenges, and welcome the opportunity to help them architect a fitting strategy. Yeah, based on my
Yeah, yeah, and
knowledge.
I would recommend anybody that isn't talking to Shaan to get in touch with him. I'll make sure his contact details are all available in the show notes below. Shaan, thanks so much for your time. Always a pleasure to chat, and
Thank
look
you,
forward to the next time we're together in person. Thanks so
Phil.
much.
Always, it's been a pleasure, and let's catch up again, hopefully before summer, to check on the pulse of the market. Yeah,
Thank
have a
you.
great day.